Well, greetings and salutations, Series 24 test takers. This is Dean Tenney coming to you from my studio in fabulous Las Vegas. The best free supplement to your paid study materials is my YouTube channel. But if you don't have a Kaplan Q Bank, I highly recommend that as well as the 24 quick sheets. You can get a 10% discount at checkout with my discount code GURU10. For that commercial, Kaplan allows me to give you a free look at Kaplan content. We'll help you with any question from any test prep vendor. It's just easier if it's a Kaplan question because I bring it up backstage. So this was an explication request for QID 1431974. During the preparation of the independent accountant's reports, the accounting firm determined that a broker-dealer was deficient and not in compliance with Customer Protection Rule 15c3-3. The whole point in that capital rules, fiscal responsibility rules, is, if you don't meet them, SIPC's going to be appointed to liquidate the firm, to protect the customers, right? Customer Protection Rules. So serious stuff. Usually as a 24, you're overseeing this function. This function is actually performed by your Series 27 or your 28. That would be your financial operations principal. Anyways, the broker-dealer disputed the exception report by asserting that the firm had in place sufficiently strong supervisory procedures and internal controls, and therefore no material weakness existed. Which of the following statements would be most correct? Now, I just love that phraseology, most correct, because welcome to the 10, welcome to the 24. A lot of these kind of judgment questions where they're asking you what is the best answer. So that could be a real challenge. This isn't, as much aim and shoot and point and click as some other exams. I always tease Series 7 baby brokers that one answer that always works on their exam is check with the immediate supervisor. That doesn't work on 10 and 24 because you are the immediate supervisor. All right, so let's look at choice A. A deficiency in internal control over compliance exists when the design or operation of controls does not permit the management or its authorized employees of the broker-dealer in the normal course of performing their duties to prevent or detect the noncompliance. So what that says in plain English is this is a bigger deal because we didn't catch it ourselves. Our accounting firm did, right? And that sounds like, that sounds pretty good. Sounds pretty good. People get upset sometimes with test-taking tricks, but too long to be wrong. That's pretty wordy, pretty wordy. I always think of this question in my past. I had a debate with my accounting firm. By the way, whether your accounting firm turns you into the regulatory authorities or your FinOp does, they're supposed to also bring it to the attention of FINRA. Anyways, but I had a debate about whether aggregate indebtedness included what I owe my brokers because I don't think it should, because they're very clear. I don't get paid. The broker-dealer doesn't get paid. They don't get paid. And so, FINRA and then my accounting firm said, no, you got to count it, right? So I can't ignore, the what I was told. Let's see what B says. If the broker-dealer had internal controls that were reviewed and found without exception or deficiency by FINRA within the past fiscal year, the controls were sufficient. You should definitely know that's not true, right? I mean, just think if that's what you told FINRA. I figured I'm in okay because last time you checked. Remember, the checks they're doing are based on previous, not what's current and what they haven't been there for. So you should have been able to toss out that one. And I don't know which choice the test taker took, but that would be a bad choice. C, the independent public accounting firm's exception fell outside the usual and customary review of a broker dealer by examining processes and procedures beyond the computation of net worth, net capital income. No, that's not true. I mean, your accounting firm is going to speak on other things besides basic fiscal responsibility about accounting in general, right? And making sure you don't have any material inadequacies. But it's really, like I say, a little more egregious if it's related to fiscal responsibility and it's related to the customer protection rule. Once uncovered, the broker-dealer would be obligated to promptly perform a reserve computation and make a deposit cash or cash equivalents into the non-affiliated bank account. Well, I like that one. I'm thinking if you missed it, that doesn't sound too bad. Right. I mean, if we do find out if we ever think we're not in compliance with any fiscal responsibility, we should check and take care of it. But that would say, D would suggest that this is something that doesn't need any further action. So I personally think that A would be the more appropriate choice. So I'm hoping this test taker got it to A and D. So D says once we've discovered it, we promptly perform a reserve computation. We make a deposit of cash into the non-affiliated bank account. A says a deficiency in internal control over compliance exists when the design and operation controls does not permit the management or its authorized employees of the broker dealer in the normal course of performing their duties to prevent or detect noncompliance. A is actually better. And these judgment questions are like that. It's not, remember, it doesn't say that, D is incorrect. The question says what's most correct, because D would suggest that we can trust the broker dealer, in this test, you believe in human depravity, original sin to take care of this. And that may not be the case if they didn't discover it on their own. So I'm going to say that A is the best answer here. And I'm hoping this test taker missed with D, because I think B and C are just a little more out there in terms of being less correct than A or D. All right. Well, I hope that was helpful. Remember your series 24, inch by inch. It is a cinch, yard by yard. It is hard. And I will see you for the next explication request, whatever that happens to be.